Welcome to the Compliance 911 Show, a no-nonsense podcast discussing hot topics for today's busy compliance professional. It's everything you wanted to know about regulatory compliance, but we're afraid to ask. And now, here are your hosts, Dean Stockford of M&M Consulting and Len Suzio of Geodata Vision.
Hey, Dean. I hope all's well with you. What topic of interest are we going to be discussing today?
Hi, Len. Nice to see you. As you know, fair lending is a major hot topic, and we've discussed many issues over the last few years in regards to fair lending. But one issue that keeps surfacing is under fair lending is appraisal bias, and we haven't touched on that yet.
I think that's a great topic. I've been reading and hearing a lot about it, and I'm really interested myself to hear what you have to say. And I'm certain our audience is going to be all ears as well. So let's hear what you've got to say, Dean.
Yeah, well, great. Yeah, so appraisal bias is I always, it seems like I'm constantly saying this. It's an emerging hot issue, but it is a very hot issue, and it's under the microscope of the regulators. We've seen a lot of enforcement relative to appraisal bias recently, and I think that probably goes hand in hand with their redlining initiative as well. But it's the practice, of an independent appraiser that placing a value on the property owned by, say, a minority person, for example, that is lower than the appraisal that would be placed if the property were owned by a non-minority. I know the example uses race of the property owners as the protected basis, but it could be, ethnicity of the owners, the racial ethnic makeup of the neighborhood, so on and so forth. So the issue is that the appraisal bias amounts to, under fair lending, illegal discrimination within the appraisal process. And this invokes the Equal Credit Opportunity Act and Fair Housing Act, which are known collectively under the heading of fair lending. And it also even extends to under UDAP, and it's unfair to consumers.
Wow. So I understand that appraisers are supposed to be independent of the process. Is that accurate? And if so, how can consumers influence an appraiser?
Yeah, you are. You're spot on, and of course, appraisers have to be independent of the process. The appraiser's role, quite frankly, is to provide an impartial, objective, and independent opinion of the property's value. After the financial debacle that we had in 2008, and God forbid, I hope we're not revisiting it now, but appraisers were criticized for lacking in independence and appraising properties based on an outside influence, thus contributing to the run-up of the property values. Obviously, appraisers will typically have contact with the borrowers, but we need to ensure this interaction is minimal and that we've established controls around our review process. I can back up, Len, actually, of almost 30 plus years on this particular issue. When I was working in on the origination side, working for a small savings bank, and of course, we'll stay on task here, but the big thing that I saw was the amount of influence that sometimes loan officers have over the appraisers, not just the property owner themselves. So hopefully we don't revisit that, but there's some examples, some clear-cut examples of appraisal bias throughout fair lending and throughout my career that I've seen. So,
well, my memory is very sharp and clear of the 2008 debacle. People were using their properties like they were ATM machines and just pulling cash out, as if it was the piggy bank.
Yeah, that's exactly what was happening, is that people were constantly flipping or turning over properties, taking the equity out of them, and the way that they were doing that in some cases is influencing the appraiser. The appraiser obviously has to have contact with the consumer. And what's happening in a lot of those cases is the consumer influences the outcome because they tell them what it is that they need in order to get the cash out. So, but we've seen many flaws in the process, and many appraisers who will no longer provide services to financial institutions as a result of the lack of independence. Appraisal bias is an important topic to consumers, especially those minority consumers, because appraisal bias has a significant impact on generational wealth building. Obtaining appraisal value is a key step in the purchase and financing of homes, and the result of that appraisal can cause changes in the contract price, and this could have significant impacts on the consumer.
So Dean, it's really not a new issue. So why do you think it keeps surfacing? It seems to be a pretty straightforward topic. How do you explain that?
Yeah, well, no, it's a great question. I'm not sure I can exactly put my thumb on it, but we first started hearing about the appraisal bias a few years ago, and the topic has ballooned in importance to the point where actually the interagency fair lending webinar hosted recently. And when you hear me say recently, it's anything that happened in the last 5 years. But the Federal Reserve in
Mm.
December of 2022, it seemed to be dominated by the topic of appraisal bias and some of the enforcement that we've seen relative to that. So, yeah, it's certainly a big issue.
So I'm certain we have a lot of bankers listening to this podcast today. How can bankers and banks, lenders protect themselves against appraisal bias and potential liability under ECOA and the FHA?
Yeah, well, you're always prompting me with great questions. I certainly appreciate that for sure. And we have a couple of suggestions I think that would certainly behoove an institution to adopt and make sure that they have strong controls around the process. But first, I would say have a detailed and thorough vendor due diligence process for appraisers. Don't don't accept somebody that walks in the door because they've lived 10 miles from the branch. 10 miles from the branch for the last 30 years. Really dig into who those vendors are. What are their credentials? What's their history, and so on and so forth. So do the due diligence. Incorporate appraisal bias risks and some mitigating controls into their fair lending risk assessment. Oftentimes, we'll go into institutions and look at their fair lending risk assessment. There's absolutely no mention whatsoever of the appraisal process, the bias, any controls they put in place for review, so on and so forth. So a next one would be ensure your financial institution's review processes are designed to identify any red flag of bias. This would include sample appraisal reports for language or phrases that could prove problematic. An example of that, some of the words that we see in an appraisal: desirable neighborhood. Well, whose opinion is that? That the appraiser, or was that what the applicant told them? Affordable neighborhood. Is it a gated area? I mean, even though those statements in itself may not be appraisal bias, it certainly prompts a reviewer to go deeper into the appraisal process as it relates to any bias that may have occurred for those very words. So review the comments regarding the ethnicity of the neighborhood. I think that's important as well, because appraisers do, and they do write quite a narrative around the neighborhood and what it looks like and how that impacts property value overall. And not that that's a bad thing, but again, being cautious and cognizant of appraisal bias in the type of terms or red flags that could suggest that the appraiser is being less than transparent or independent. Incorporate statistical sampling of your mortgage files. I mean, compare values to contract amounts and use HMDA data to identify target groups versus your control groups, your purchases versus your refinances, etc. I mean, I think this is important. I mean, you and I have worked numerous times on all kinds of fair lending data
Hmm.
analysis to uncover, not necessarily focused on appraisal bias, but again, that those statistical sampling of, looking at those values and is imperative. It's very important for that control to be part of their overall risk management program. Ensure anyone involved in lending or the appraisal process are trained on fair lending and specifically the appraisal bias red flags. While we put a lot of trust and we do vendor due diligence on our appraisers themselves, it's important for staff to also remain independent as to not influence an appraisal or the appraisal outcome. In a lot of cases, we have now automated services. So use your automation, which is an evaluation service, and to human performed valuations and do some sort of a comparison. I mean, if you find that there's a huge anomaly between the automated evaluation, which, you're using artificial intelligence and all kinds of other things, but if you find that there's a huge anomaly between the two, then reconcile it. Try to figure out why that may be occurring. So again, compare your automated evaluation services to the human performed valuation. Try to minimize contact between the appraiser and the applicants. I know this can be a challenge because appraisers have to reach out to the applicant to enter the home in order to do an interior appraisal as well as the exterior. So there's always that contact, but again, having those discussions with the appraiser and as well as the applicant. I mean, in some cases, I remember back many years ago when we started to see an uptick in appraisal bias. One of the things that we had is we actually scheduled with the applicant. When I say we, the bank that I work for, we actually took the process away from the appraiser and we said to the appraiser, when is it that you can do it? Give us a couple of dates and then we'll call the applicant. And then what we oftentimes did is ask the applicant to to refrain from having interaction with the appraiser. But I'm not saying that you have to go to that extreme, but establish a clear process for reconsideration. So if an appraisal comes in, it isn't what you expected. You have data from the area that the census area that shows what appraisals are going or what properties are going for. Then certainly establish a process to do some reconsideration and support why you think that the appraiser is off, so on and so forth. Incorporate an appraisal complaint process. So oftentimes what we see is obviously as part of a compliance management program, we have to have a complaint process to respond to various complaints. But I always say you should almost have a separate process in itself just for the appraisal complaint process because we get a lot of pushback oftentimes from applicants who think that their property is worth more than technically what the appraisal comes in at, and it may be in some cases. Purchases are a little easier, Len, quite frankly, because you have the market, or essentially the market value. I mean, if you have somebody that's willing to pay a certain price, then to me that's somewhat of a market price. But
Right.
some of the issues that we've had, I'm saying they're probably going away now to some extent because of the interest rate increases. But if you think back to how low interest rates were recently, that in itself, in my opinion, help prompt some of these appraisal biased issues for sure, where people were outbidding by $50,000 in some cases what the actual value of the property was. Well, that's a problem. I mean, that's a big problem. And the one thing we can't do is have the appraiser come in with a price point that that is that matches that actual purchase price. We know that that's not what the property is technically worth. It may be worth that to the person who's purchasing it,
Right.
but
Right.
but that's where it becomes a challenge. So you better have deep pockets because you're gonna have to put more money down if you really want that house because the appraisal can't support it just because of the market taking off and going crazy. So those are just some of my suggestions, Len, and I hope that people certainly take them into account and adjust accordingly.
I was actually counting your ideas, your suggestions. There were 9 of them, Dean. I'm certain there's a lot of people with a podcast you can go back and replay. And I
Yeah.
think all those ideas you came up with are great. And I'm certain a lot of our listeners will be replaying your suggestions over and over again. So
Yeah.
those are great ideas, great suggestions based on a long-term experience of many years that you've had in different capacities. And I'm certain a lot of our listeners will find it helpful. So do you have any parting words, Dean, for our audience today?
Yeah, I do. And when you talk about how the experience level, my hair can certainly support that. It was gray. I think it's turning white now. But yes, I think the parting words I would say is that financial institutions should not downplay any evidence of appraisal bias by any stretch of the imagination. They should make sure that the appraisers are properly vetted through their vendor due diligence process, that controls are put in place on the ordering and the review of those appraisals, that complaints are taken seriously and tracked, and that ongoing monitoring, just like we do for anything else in compliance, is evident in the process of the institution.
Dean, this was not only another great topic, it certainly was a timely topic to discuss today. I'm certain many of our listeners will find it very practical and useful for them as they work through their daily routine as bankers. So thank you for all the suggestions on behalf of all today's listeners. This is Len Suzio from Geodata Vision.
And this is Dean Stockford from M&M Consulting saying thank you for listening to today's topic, and please let us know of any additional topics you would like to hear in future episodes.
Thanks for listening to the Compliance 911 Show. If you like the podcast, be sure to subscribe so you don't miss an episode. While you're at it, please give us a like and review to help others find the show. As always, links are in the show notes, and you can always find us online at compliance911show.com. Follow M&M Consulting and Geodata Vision on LinkedIn for all the latest news and information on compliance hot topics.